finance trainings program that we actually work together with the regulators, the banks, universities, and partners to design a structured learning pathway to help bankers identify and capture the emerging opportunities. Yeah. So during our training sessions in the past few years, what we observe is we see the disconnections. Yeah, the disconnections on the industry practitioners, where they always claim that the bank doesn't understand me. Yeah, the banks always turn down our projects. Yeah, and for the bankers, we also see they always have a argument saying that we cannot see any bankable and scalable projects in the market. And a lot of bankers also complain that my client don't understand what I'm talking about. So they are not willing to transitions, right? So we see the disconnection throughout our observation of trainings to the banks and also some of their clients. So this is where we think the disconnection is about lack of understanding, the mutual understanding for both of them, right? So, yeah. So these are the pain points that we figure out. So the project developers are struggle to prove the feasibilities and cash flow to the financier, where the bank's pain point are lack of consistent data, unclear risk profile, or the thing is very small, or sometimes it's just a one-off project. Yeah. So then back to relate to our session, here we're talking about how to improve the bankability. Our tweet is more to how to make the readiness for bankability. Yeah. So a bankability, just recap, is actually for the project how you can give confidence to the bankers that they're willing to fund you, right? How you give the confidence to them. So there are the few things that to prove that the technical feasibility, okay, and commercial viability, financial strength, and governance. So it's about how to de-risk your technology to ensure your cash flow feasibility and abating taxonomy alignment from the start. Yeah. Okay. So this is where, after our observations, we carve out this collaborative learning approach, where we found out that previously a lot of training is purely very siloed. The energy sector have their own energy sectors trainings. So the finance sector have their own finance sectors training. So this is where we cut off the collaborative trainings that we include the industry peoples, we include the regulator, the policy, the universities, academicians to carve out, co-develop programs that can make everybody can speak the same language, right? So we will call ourselves as a bridge to connect those academia, industry, and finance to equip our financier, the bankers, to have better knowledge, yeah, on to assess the risk. So the unique of this is actually, this is how we connect it. So, yeah, this is some of the highlights in these 2 years for this collaborative trainings approach. We have been trained more than 10 leading banks and more than 50 sessions about them how to identify the opportunity, the risk, how to structure the loans, okay, and how, importantly, how to engage with their clients, right? So these are some of the programs that we have been developed. So these are the one, the certification program is currently, we are trained a lot of our bankers, especially the frontliner, that equip the knowledge and skill, right? We call it Green Financing Advisor, GFA. We have GFC in Singapore, and then we have a Green Finance Expert for the, in Singapore. So, and another one is because of the requirement from our Malaysia Central Bank to conduct the due diligence. So the taxonomy, right? So these are some of the banks that we have been trained, especially for the sustainable finance, majority in Malaysia. And throughout the journey, what are the output, the transformation output we realized that bankers have now become more confident and more creative to engage their client on energy transition and sustainability. And developers, the project developers and innovators now also like better understand how to make their projects bankable. What language should I tell my bankers, right, to get my project readily, bankable readily. So for the academias and consultants who have begun, they learn how to align their research to make it more become financial needs, more commercial levels, So these are some of the photos and case studies that we share. Like this is one of the programs that we conducted for RHB, the GFA. So yeah, you can see Sai Park here. Later we can invite Sai Park here to share how they engage with the bankers and what question the banker would like to ask him. Okay, so and at the same time, the banker also have the chance to really understand what are the real challenges yet that the industries is facing, okay, how they manage their risk and the funding as well. So yeah, this is Saipa. Yeah, we have Puan Noarza here. Later she will be one of our speakers as well. So, and we also have this, because of this collaboration partnerships, right? We also have a lot of opportunities that our pool trainer also have the opportunity to visit the site, like the waste to energy plant invited by Sai Park, okay, like Huawei, okay, in Shenzhen, to understand more about the battery energy storage system, the risk, and so on. So this is where we're able to really have the practical, real case study that when we give the trainings to our bankers, right? So this is also one of something very interesting. We're able to, if the courses conducting in some of the green building, yeah, especially in our buildings, right, which is a green building certified. So while they are learning the theories about what is energy efficiency, they also have the chance to really site visit, practice how to interview the buildings managers, and also, yeah, to identify what are the green features, right? So they not only learn from theory, from book, they also cited the thing, and they're experiencing it, right? Yeah, these are some of the courses that we do. The banker now also, like the engineer, they need to go to see all these things. Yeah, they learn how to ask questions and so on. Yeah, so we also have, as we know that, data center is something that's very big coming in Malaysia. They are actually one of the biggest RE off-takers in our regions. Yeah, so we also onboard the data centers, industry practitioners to come in to share with the banker, and the banker have the chance to ask a lot of questions to them. From there, they know where is the gap is actually. Yeah, so these are some of the things we've done. So this is the GFF program we done from other bank. Then you can see, yeah, they really have the chance to really experience it, right? So this is just some. We even have opportunity to bring a group of banks to China also, because they have a lot of these supply chains. The vendor is actually from China. They also want to know about, yeah, how they manage and governance and a lot of things. Yeah, so this is about how we integrate the collaborative learnings that combine finance, taxonomy, technology in a structured learning way that connect in the real transactions. Okay, so these are some of our coming soon courses that later maybe you can find out more. Yeah, this is on our Singapore side. So what our experience tells us that making a clean energy bankable actually start from people learning together. Yeah, so when knowledge is shared, confidence grows. So when confidence grows, financing will flow. Yeah, this is what we believe on that. So now, allow me to introduce my panel speaker to share, yeah, what the journeys that we have go through. Okay, so yeah, allowed to invite Angus from RHB Group, yeah, Group Sustainable Officer from RHB. Yeah, Mr. Tan, UOB Singapore, Head of Battery Manufacturing and Energy Storage. Yeah, he fly in all the way from Singapore. Yeah, so Puan Noarza, yeah, the Head Operations of Sustainability Sai Park Resources Berhad. And also we have Associate Professor Dr. Ho from UTM. Yeah, okay. Thank you, everyone. Okay, so yes, all my good friends is here. Okay, I would like to, maybe I would like to start with, throughout some of the photos that we see just now, right? Our sessions just now. So maybe I would like to start with Noraza. Yeah. So what are the challenges that you see? Maybe you can introduce yourself a little bit about Sai Park first, and then you can share about what are the challenges you see as a projects, yeah, developers, the RE project developers, and that you've been invited into our trainings, right? So what are the things that you can see it can help? Yeah.
Thank you, Sharon. Good morning, everyone. My name is Noarza Maslow. I'm the Head Operational Sustainability from Sai Park Resources Berhad. As you know that Sai Park, we are the public listed company since 2010. And our verticals is solar energy as well as biogas, biomass, and we are the pioneer for waste to energy they only operated in Malaysia now. So we have our presence. We have from Kuala Perlis, in also the largest floating solar in Danau Tok Uban, as well as the largest hybrid floating solar at Merchang. We have at SIG and also at Negeri Sembilan and Pontian for the solar. As for the biogas, we have a plant in Kampung Gajah Perak, together with biomass plant. As for the waste to energy, we process about 1,000 metric ton a day. 600 metric ton goes to the waste to energy, and the rest, we have another landfill, and that's why our facility is called Integrated Waste Management Facility. All right. So, your question?
Yeah, so Noaza have come to join us and giving a fireside chat way of trainings, okay, to our bankers to have chance to know more about what SIPAR is doing, what are the challenges it's doing. So what are those things that throughout these few sessions with banker, what is your experience? Yeah.
Okay, so from this experience of joining the session with the bankers, also with the academia, like Dr. Ho from UTM. So we've gained a lot of exposure. So now we can talk like the bankers. I mean, like
banking language. Now you can talk
with the banking
language.
We have common understanding, and on the banking side, so we incorporate that in our bankability readiness process. So when we even go to the market, we did that, and I would say that it really helps, especially when we did the onboarding checklist given by the banks. It's a long list of checklists, I would say, lots of parameters. But with this collaboration and the fireside chats really help to really understand what actually the bankers want, what are their risk appetite, and what their expectations from us as developers. So sometimes when we submit things, we thought that they could read our minds, right? But actually we need to give a really accurate evidence, quantifiable. It's not just qualitative, but again, together with the due diligence. So I would say that ABS has done a really good job in bridging the industry and academia to be on the same platform and talking about the same thing.
I think the unique part for this session is a small group fireside chat. Means we structure it like they learn the concept, they learn about taxonomies, okay, and they're coming in as an industrial practitioner to share the real challenges. Yeah, I still remember you share a lot of like the elephant's case and also how it's destroyed and so on. Yeah, so, and I remember at the first when she came, right, yeah, she prepared a lot of technical things, right? Banker is not interested into it at all, right? Banker just want to ask, what question they always ask you? What question they always ask you? Just remember?
Always ask about IRR and about payback period.
Yeah, I still remember a banker always challenging, how you make money like this? I got so many challenges and so on. So I think from time to time, Noaza also able to get what actually the banker want to look at. The more that they come, the more that she know what to prepare. And recently, I remember the banker will say, can we have a chat to sit down and discuss more about this? They see the opportunity. The banker also see the opportunity on that. Yeah, that's from RHB bankers actually. Yeah, okay. So maybe later you can add on also. So now I pass to Angus. So Angus, can you share from banking perspective, right? What are the challenges for you to really accelerate the financing to push for these cleaner energies in ASEAN or in Malaysia? And what is currently RHB is doing to support this? Yeah.
Good morning. Thank you, Sharon. Good morning, everybody. So bankers get a bad rap, right? So it's all our problem. It's all our fault. But let me put it to you this way. You know, I'm going to go back to what banking is. Banking is financial intermediation. So what we do is that we take surplus units, surplus cash in the market, and we lend it to deficit units. So that's the creation of credit. Now, a creation of credit is important because that drives economic activity. So, you know, for bankers, do provide an integral aspect of economic growth. by virtue of financial intermediation. So whether it's green, brown, pink, purple, it doesn't really matter. Financial intermediation is a core driver of economic activity. So now, in order for economic activity to be sustainable, and we talk about sustainability, we always talk about sustainability in regards to climate, in regards to social, but financial sustainability is equally important for reasons I mentioned earlier about what financial intermediation is supposed to do. So in that regard, we as bankers have a fiduciary duty to our shareholders to ensure that there's a return. Because once there is a return on their investment in the bank, it means that there is trust and confidence in the financial system. And core to driving economic activity and trust and confidence in the financial system is equally important. So by virtue of why the bankers are probably a bit more diligent in terms of asking questions on new projects is because we have that fiduciary duty to our stakeholders to ensure that they are looked after. So a banker has a duty of care. This is what we learn out in banking school, is the duty of care. And that duty of care extends far beyond our responsibility of just lending money, but is to ensure that our stakeholders are taken care of and looked after, because paramount to banking is the trust and confidence that you all must have in the financial system for it to progress. Now, at RHB, we are the fourth largest banking group in Malaysia. We do have an ASEAN presence because we have offices in Indonesia, Singapore, and Indochina. We are also very committed to sustainability in regard to our commitment. So we've set up a group sustainability division which has just come into formation this year, and I run that group sustainability, out of which we have two very distinct areas: sustainable finance, which is the core driver of finance, and we have sustainability strategic management, which drives our strategic positioning within the sustainable landscape. We set very, very clear KPIs. We want to mobilize 90 billion sustainable financial services by 2027. And that clearly, if you turn that around, means that we're willing to commit 90 billion to sustainable social transition projects in the market. So we have set the money aside, and we just want to make sure that they're feasible and bankable, feasible commercially and bankable financially for the banks. And to that end, we are putting our money where our mouth is. In addition to that, we've set ourselves a decarbonization target. So it has to be a purpose. Our investment in the market or sustainable market must come with a purpose. Our purpose is to ensure that we decarbonize. Because the bigger picture is this, that we have to contain climate change to 1.5 degrees Celsius by 2100 in order to ensure, now this goes back to the money part, that economic activity is sustainable as we know it. That's to ensure that we continue to have social well-being. So we've set ourselves a 20% decarbonization target by 2030 and a 96% decarbonization target by 2050. Admittedly, our baseline is not back to when we started in 1900s, but to 2022, right? So that's where we are. In addition to that, leave nobody behind. So what we've done is that we want to uplift communities. So we've also embarked upon another target of ensuring that there's financial inclusion for 2.5 million people or businesses by the 2027 target. And then women in leadership is another KPI that we want to have at least 33.3% of women in leadership positions. So very, very distinct 4 KPIs. So again, that will be the structure that we move forward with. Now coming back to the point, I think KPI 1 and KPI 2 is probably what we're going to talk about more this morning. So yes, what we find there is a gap in is in terms of technological advancement or technological usage, commercial feasibility of the projects, and my bankability, making sure that I make returns for my stakeholders. So those are the things that we're going to have to juggle with as a banker. Now, there is no perfect science to this because sustainability, whether we like it or not, is a new novice embryonic part of our economic development. So we are going to make mistakes. We are going to be overzealous in terms of asking questions. And the reason for that is not because we want to burden our customers, is because we want to ensure that we're asking the right questions. So we're learning. So I think that coming back, capacity and capability building is important. And that's why we work very closely with the Asian Banking School to drive our RMs to partake in their courses, to get certified. Because as certification comes more into play, capacity building becomes more prevalent, then I think that those ability to deal with customers like SciPark will be a lot better and more seamless. So that's something that we're doing first to ensure that we bridge the gap between what I talked about earlier. The other thing is about automation. We're looking to actually ensure that our loan portfolios, the scope 3 emissions from there, are actually data which is credible. So we're working with some technological vendors now to ensure that we automate the extraction of finance emissions from our loan portfolio to a credible platform where we can use that data, not necessarily just to keep it as a record, but to use it as a proxy for similar customers in that bracket. So that allows our RMs to identify that we may not necessarily need to ask too many questions or because we know what similar companies are doing in the market. So we're looking to actually enhance technology and AI to ensure that we become more customer-driven or customer-centric from that perspective. And thirdly, it's about the bankability of a project. And where we're working in RHB is on carbon pricing. I think the reason why we find that projects are not bankable is because we're mispricing carbon, right? And carbon is not just the carbon tax. Carbon is about the detriment that brown financing is doing to the environment. What's that cost? What's the external cost? We don't know. But if we can actually have a gauge in terms of what brown financing is because of the carbon risk premium, then I think we'll see that more and more RMs and more banks will be more willing to be moving towards green financing because they know that the physical and the transition risk of brown financing is just way too high for our stakeholders to actually commit to. So three key areas that we're looking at. And again, bear with us, be patient with us. I know some of our principal companies find that there's too many questions and so on, and we don't, and some of our arms don't know. But I think it will have to be a progressive journey for bankers as well. I'll stop here first.
Okay, yeah, I think it's very true that what Angus has mentioned. Actually, our banking industry is working very hard, to really close the gap, So that's why in the past 2-3 years that we start the trainings, we do see the banker is like forced to come for training because they don't understand all these things. It's just know that we need to do something. Until now, they want to learn more about it because they really see a lot of opportunity. And also, they are not only doing for themselves, they also to see how can they help their client. I remember RHB also, they come up something like the no one left behind, right? You have all the solutions for all your customers. So we do see the progress, Like you said, please bear with us. We are working very hard now, to close the gap. Then I will pass on to Dr. Ho. He's actually one of our core trainers that at first, when I meet him, he tell me so many kilowatt per hour stories that I don't understand. Like Inchaf Hafiz is also one of our trainers here. I tell him, banker is not interested to how to calculate your kilowatt per hour things. That he also find very difficult to understand what you actually want, right? So we work together, we evolve, and the banker has also become a trainer to train them as well, right? So what you want to share,
So just to introduce, I'm from UTM. Okay, so my expert is on renewable energy and energy management. So I did a lot of studies regarding all this system. So the time when Sharon came to me, here I'm going to talk a little bit on how we actually designed the course to try to close the gap. So when Sharon came to me, she was asking me to deliver this solar energy course. So my slide was very technical, right? It's showing you all the efficiency, how to calculate them, the radiation, how do all that. Then when Sharon looked over the slide, it's like, I don't understand what you're doing. And then I asked her back, then what do you want from me, right? This is the course that I deliver in my university, and I thought, as a banker, if you really want to understand the technology, you need to understand all these technical backgrounds and all these bases for you to successfully evaluate them. But as time goes by, when we communicate more, and then we did the delivery, the first round, actually we have a lot of improvement. The first time I deliver until now, my approach is actually different. So I think the first thing is I try to put myself in the shoe of the bankers, like what they actually need to know. Because yes, like Sharon said, they don't need to know the technical things. I think one thing that the industry, when they send in their application, the concern of the industry actually is like, how will this project work, right? That is the main thing that you are trying to show, that this project actually works. But for the banker side, to me, they are looking for how this project can last, right? You don't want a white elephant project. You don't want a project that is susceptible to a lot of risk. But this is the disconnection where the industry, sometimes they don't tell you the picture on the risk aspect. Like, what is the factors that can affect this project, how it may fail, and what are the mitigation plans behind it? So these are the things that when we design it, we start to incorporate, which is why when I deliver the course, I always relate back to some of a real life scenario and what are the problems that has been done before, which is I think what mentioned by Mr. Angus just now, that you are currently developing a system where you have existing cases. So the RM now can refer to those cases and then they can use that as the basis to increase the confidence of the financing. So that is where I come in, right? I start telling them stories like, okay, if you do this from some previous project, they face some problem. So for example, one of it is like last time when we talked about solar financing, when they do the feed-in tariff, like a businessman will always use the cheapest land, which is agriculture land, but a solar project is not agriculture. So technically, it's illegal to do that. But now you can do that because the government put some condition where they can provide you a special permit to build it. But that was the situation. So there was a plant that I know they got the plant demolished, like partially, only then they change again. So this type of little things, right, this is what bankers want to know, right? So what are the problems? So when we designed the time, we came out with we still include those technical terms, but in a very simple format that they can understand, like these are the minimum requirements for you to at least know how this thing works. And then
because banker like checklist, checkbox.
Yeah.
So I tell him, you don't tell so many things, you just tell summary, how many things need to do, and check and ask, right?
Yes.
Yeah.
And another one is the documentations, right? Because they need proof. If someone's going to tell you, oh, my plan is going to be all right for the next 20 years, will you believe them or not, right? So I think the banker was like...
Yeah, but I think the banker whilst all documentation is all good and all that, but we do run our own due diligence. So what we do is that we see who the off-taker is. And you're right, Prof, because when you say that we want to see whether the project will last, but for bankers, it's giving a loan is the ability to repay, right? So we don't mind giving 90 billion loans as long as we know that there's visibility in terms of the repayment schedule. We know that the off-taker is credible. So every time when we look at project, we have, say, TNB behind it, or we have Petronas behind it, or we have a strong off-taker behind it. And we can see that the contractual obligation of the off-taker is 10, 20 years in the future. We know we are safe. And so we know we're more willing to actually provide money to that. The trick is for us as bankers is to do the supply chain, to how well are we going to be able to provide financing for the lesser credits. So in RHB, what we do is that we've created this thing called the eco cycle, the ESG eco cycle. So what the eco cycle is that when we do a credit assessment, it's a dual credit assessment, not just on credit, but on the maturity profile of the customer from an ESG perspective, whether they're emerging, progressive, or advanced. So by virtue of that, we can then decide, okay, well, this guy may be emerging, so he's more, whilst we can give him a loan, we know what the repayment schedule is, but it's an opportunity for us to also offer him a bespoke transition pathway so that he can actually then transition during the course of the loan with us. So we will give him incentives, but we'll also expect him or her to transition in a way that we feel is progressive and purposeful towards more green activities. So it is something that we work on both. So our credit assessment papers now include an ESG maturity profile as well. So that's where we are with that. So it isn't because of documentation. Documentation is sometimes not worth the paper that is printed on. But what we do is that we look at the repayment schedule. And that's why as bankers, we have so many other things that we look at. We look at the security that being offered. We look at the potential business plan. We also run analysis through AI now, thankfully, that how feasible is the projected commercialability of that project. So yeah, there are various measures that we can use now, but it's getting everything together. And so to that point, that Prof, it's something that we look at, but we do run our own diligence as well.
So thank you very much, Mr. Angus. Yeah. So I guess that is the thing where the technical side and the banking industry, there's not miscommunication, but there's a gap in communication. Yeah. Because initially when I started teaching, I never thought of all those things like the plan, how to gain the confidence. So when Sharon was talking to me, I like, okay, Sharon, can you explain to me exactly what you're trying to say? Yeah. So I think I will stop for now. But basically, this is what we had. It's actually trying to put the technical terms as simple as possible for the banker to understand so they can use it back and translate it into what they need in order to plan properly the financial and everything. So, yeah.
So it means like it's improving the readiness of bankabilities to close the gap on it. Yeah. So actually for educated purviews, right, what can you do to improve it? What will you plan to do can make all our life more easier, researchers and educators here?
I think what I was planning to say is actually very similar to what Mr. Angus has already mentioned. Because I think as an academician, sometimes we are in this whole chain as a third party that is neutral, right? We are not specifically biased toward the banking industry or rather the industry themselves. So here I was thinking, it's actually if you want really to close the gap, so the academician can create a platform, but of course with the support from the government because it has to be kind of a top-down initiative where we can gather all this information regarding existing project, emerging technologies, and emerging technologies into that point is actually the most tricky thing because green technology evolves every day. Today, for solar, you are talking about previously monocrystalline, polycrystalline, now it's monocrystalline, now you're saying bifacial, and somebody else is now talking about perovskite. So what are they? I guess you may not hear of all these terms, right? So when it comes to this, they need someone that they can refer to, which I believe actually they do have now as a technical expert in the bank. So they do execute their due diligence to understand the technology. But sometimes if it's evolving too fast, it's difficult. And as an academician, that is where we are the forefront of this technology evolution because that's what we do, our bread and butter, which is to study and improve this technology. So if we can have this ecosystem where they can refer to us in order to get information on how good this project can be, and maybe to evaluate those type of technical reports that the industry provided to them, so that at least they know, okay, this is it's a neutral view on whether is it really feasible or not. Something like if you talk about like land, like we have land valuers. So you can trust those reports saying that yes. But for green technology at the moment, there is none. But I do understand that the difficulty of that is because there's just too many things. We are talking about waste management. We are talking about renewable energy, energy efficiency. There is just a very big scope. But I do think this is something that we maybe need to start, even if it's small. Yeah, and this could actually help in terms of the bankability and the project development in Malaysia. Yeah.
Sorry, I don't want to hog the limelight here, but the thing is I agree.
Yes, okay.
I agree with that because what we do in RHB is that what we've done and under sustainable finance is that we've actually hired renewable energy specialists to say that they're not bankers, but they're there, but they need to be able to actually provide some diligence in terms of the projects that we're supposed to finance. Now, at the same time, we as bankers, we are teaching them how to be financiers as well. So we send them to the AICB for
they want to learn
banking
how
course.
to read financial statement.
Yeah,
There's
correct.
another type of training that we need to train.
But I think that I don't think we should, in the space that we're in, sustainability, we should beat ourselves up and saying that we don't have the technology or we don't have the capacity or capability. We don't because it's a new market, and I think that we have to accept and understand that this is obviously going to be a learning journey for both the bankers, the industry, the academicians as well, because the data points have not been formed. But I think there'll come a day when sustainability will be embedded in banking. It'll be mainstream banking. More and more people will be more sustainability driven. So this will be second nature. But we have to start somewhere. I think the problem at this point in time is that we're not starting. We have to start. And I think if you start, that's already, to me, a good thing. Right?
Okay, so yes, thank you, Angus, for that. So yeah, we have to start somewhere. But I think I truly see the progress is really going on now compared to the past few years. So we talk about emerging technologies. Actually, we are happy to have Mr. Tan here from UOB. He's specialized in this battery storage system. Yeah, Mr. Tan, would you like to share more? Yeah.
Yeah, first of all, I want to say a big thank you to Sharon and the ABS team for inviting me here, and a privilege to join the panel. I think as kudos to them, especially to bring together academia, industry player, financiers, and I guess sort of incorporating the policies, regulators to sort of bring up, enable this platform for cross-exchange of ideas, upping the game, not just for Malaysia, but hopefully in the ASEAN region, to accelerate the pace towards sustainability. In fact, we are at the crossroads, and all of you might have heard, read in the news, the ASEAN energy ministers yesterday have just endorsed for ASEAN to collaborate, accelerating towards 45% of green energy sort of power mix in the next 5 years. And this actually here today, talking here today, I think hopefully the ideas that we have today will generate ripples that eventually will cause waves to help us propel towards that direction. Now, also from a UOB standpoint, very fortunate. UOB just celebrated our 90-year celebration as one of sort of top 3 Singapore bank. In the last 90 years, we've grown a lot. In fact, we've helped more than 5,000 companies, deploying 50 billion of capital, generating 250,000 of jobs in the ASEAN region. And UB is proud to be able to play a role and help to sort of move the sustainability effort along as well. So 3 things I wanted to do in the next couple of minutes. I want to first also start a little bit more high level on the UB structure, where I come from, and a bit of introduction about my background, how I can contribute to this, and then I'll dive into the technology. So as I mentioned, UB is one of top 3 Singapore banks. We have a strong presence in ASEAN. We also have presence in the West, in North America, London, and Australia as well. We have a AA- rating because we are in also strong in Asia Pacific, including China, North Asia, where a lot of course of the manufacturing of the new technologies will stem from. And with the geopolitics that's unfortunately rolling out now, we see a lot of the investment flow coming to the ASEAN region, and with the increase of demand of energy in this region, we also see again a push, both a pull factor for some of this new technology to be deployed, and at the same time, how some of this investment can be very efficiently deployed into the area, and how our bank will play. Now, personally, I worked for UOB for almost 12 years now. I spent the first 10 years in North America. I was in charge of UOB's energy portfolio. I mean, prior to that, I was with Shell. I was actually really an engineer, chemical engineer, so I worked in their value chain before I joined UOB. Having learned the North America sort of financing and structuring, so last year, UOB sort of extended an offer for me to sort of move back to the region. I was told that the region is burgeoning with lots of needs for green and emerging technology. And I was fortunate to be tasked to look at the entire battery value chain. In fact, starting from the EV battery, covering to the battery energy storage as well. So that's the area that I have been in. So a year after I moved back, when I first came back, one of the first duty and responsibility I had was to visit all the technology players, starting from the manufacturers to the assemblers in China, learning how they work, and also sharing with them how UOB could sort of help them import the technology and investment into this region. At the same time, also reach out to the countries that we have presence, Malaysia, Indonesia, Philippines, where some of this technology are deployed. And in the last year, life and busy. We financed one of the first largest battery energy storage project in UK, and we also did subsequently a couple of projects in Australia, and have learned quite a few things about what are the structuring that we can actually deploy and help the market grow here. So now moving into the battery energy storage technology, of course, we see a lot of players, we see a lot of different structuring, but if you take a step back and look at how the battery technology has evolved, some sort of trends that actually help such projects become more bankable. So on the technology side, we saw how the battery technologies has evolved so quickly that the life of the battery has extended by leaps and bounds. The degradation curve has actually tempered somewhat, allowing the battery life to operate for much longer, and also with the potential for battery augmentation to further extend the battery life. Now, when the battery life is extended, from a project finance standpoint, you're actually able to depreciate it for a longer term, and therefore improving the bankability of such. But at the same time, when the battery costs, because of technology improvement, we also see battery costs also coming down, making it a lot more sort of bankable to actually support the intermittency of a lot of the renewable projects. So a few things I wanted to mention here. As countries, as ASEAN energy ministers sort of recommend for us to push towards the 45% power energy mix, let's not forget there are a number of challenges. Number one, green energy, the wind and the sun doesn't necessarily, or the sun doesn't necessarily shine when we need it the most, neither does the wind necessarily blow the strongest when we need it, right? So as a result, the intermittency is a challenge in itself. And secondly, for a very long time, especially in the ASEAN region, we have not actually invested in the infrastructure, in the transmission and distribution infrastructure. As a result, the infrastructure itself is under strain as you put more and more renewables on it. And thirdly, what we see is the recent emergence of the data center. We all of us, including the school now, will operate on AI, and Mr. Angus alluded to bankers even using AI to help with our analysis. Now, all these data centers are huge power sink. They need a lot of power, but they need stable power. They cannot operate on intermittent power. And therefore, battery energy storage plays a vital gap in a few ways. Number one, it actually provides a stabilizing effect, ensuring that the power is not intermittent. It absorbs the excess power when it's not needed and release it when there's indeficiency of power. Secondly, battery also can respond very quickly to any sort of emergency situation where it can cause stress on the grid. So it actually provides a backstop for very old grid infrastructure. So a fast, sort of less capex intensive compared to having to renew the entire grid infrastructure. And thirdly, with the emergence of the data centers actually like to be, most of the time, like to be placed in an area where there are lots of data flow. And we all know that Singapore, attracting a lot of the MNC requires a lot of the data power. And similarly, in the north of Malaysia, where the industry park is, Penang is also attracting a lot of DC. Now, all these draws in a lot of power, and therefore we see that the DC power was also sort of sparking the need for battery energy storage. I mean, just half a year ago, we saw how Portugal and Spain suffered in an unprecedented scale, right? Because they underestimated that intermittency, while the whole European sort of infra network is quite integrated, but when it comes to a certain sort of power swing, we saw that countries need to protect their own power, and therefore when that happens as a domino effect, they have a huge blackout, and there's billions of dollars of losses. And that could have been avoided with, of course, accelerated investment in battery. Similarly, the opportunity here, we all heard about the ASEAN power integration. As a result of Singapore needing a lot of power, but Singapore has a lack of space. So therefore, building the a solar plus a BESS or wind plus a BESS hybrid, delivering power into Singapore, it's now sort of another driver for battery energy storage sort of to bloom. Okay, now we want to quickly dive in some of the interesting solutions that our bank can brought in, because in my role, I actually look across the energy, the battery value chain. I'm geographic agnostic, so that means that I'm able to work with my team in different countries to structure the best solution, especially to facilitate cross-border investment. Because a lot of this equipment, either most of it in China, but some in Indonesia, and now we have manufacturers starting to bring their value chain to ecosystem to Malaysia and Indonesia. How then do they deploy this battery into the other countries? We have internally developed a financial supply chain management solution, which are tailored solution to help projects optimize the capex flow in order to improve the project IRR. And again, because I look at the value chain, I work with the funds, and when the project IRR increases, automatically increase the interest of the funds to come in and draw in the investors. I mean, a case in point, we recently saw how SolarWest partnered with Brookfield, both our valuable partner, to help come into Malaysia to accelerate this. So, and maybe very quickly, I know I just want to mention some of how in the mature markets, how battery energy storage could actually have a very sort of complex structuring to enable its bankability. Now, one of the UK project that we financed was actually based on a stacking revenue basis. Now, what does that mean? Now here in Malaysia, I mean, we have rolled out the first inaugural My Best, and hopefully the results will be rolled out soon. We all know that the returns model is based on a fixed sort of a cost recovery plus a margin sort of improvement on its charge. Whereas in the UK, where the market is much more developed, there are three buckets of actually revenues to it. One is actually the trading, because as and when with the volatility of your power and with enough depth and breadth of your liquidity of your market, you can actually do intraday, intraday, intra-hours, or even on a wholesale market trading. So the best unit can be used to take in the power when it's cheap and release it when it's when the market, and sell it back when the market needs it most at a higher price. That's a delta arbitrage that you could use. Now, the second bucket is actually the capacity market. You can actually, if you size your battery correctly and with the probability calculation, you can actually contract part of your capacity of a battery to capture a capacity sort of revenue stream that gives you the base layer sort of to backstop your return. And lastly, on the frequency response, essentially it's like your how the battery is called into service when the grid is stressed, and you have various forms of contract to sort of, again, stack your value chain. Now, to add to the complexity, what we also see in the more advanced market, you can actually bundle this together and then contract this capacity, contract this exposure for sort of arbitrage to a off-taker, where the off-taker pay a fixed price to the battery energy storage operator, and then they will use this asset to trade in the market. So that also increases the bankability for the bank. So we see a lot of this structure, and as Malaysia and in the region, and the ASEAN region sort of grow, eventually we hope to see some of this structure mature, and then having the knowledge how we structure hopefully will benefit the market and we can grow together.
Thank you, Mr. Tan. So we can see that every one of us play our role, and we are working very hard to get the gap smaller and smaller. So yeah, this is what we hope to look forward. So maybe it's a time I'm open for the floor. Do you have any suggestions for us here? How can we work together in an ecosystem? Yeah.
Thank you. I have a question here. I'm Puvana from Puvana Meta. And what we do is landfill diversion and recycling. So my concern here is, I'm very happy to see the clean energy and all, but what is the end of the life of these batteries and solar panels? Do we have the solution and financial support? So that's my main concern here. Thank you.
Maybe I can answer that. Okay. I'm the technical committee with SEDA to develop the guidelines for used solar panel. I think probably it will be published by end of this year. Of course, as the developer, we also have the same problem to tackle the use panel due to, of course, replacements and the inefficiency of the panel. Then you have to do, you have to change it. And sometimes when you also want to go for warranty, it's going to take time. So some of it is being, stacked and kept at the storage at our site, and hence all the developers has actually sit with SEDA and Department of Environment. At the moment, PV panel DOE did not regard it as schedule waste, but we have to still manage it because there are values, right? The frames, aluminum frames, the glass can be recycled to be the black powder and can be, recovered for other purposes. So the government is looking into developing guidelines so that it can also cover extended producer responsibility, where the responsibility should lie with the manufacturer. And then to increase the value for circular economy, they have identified Zenviro, one of this company in Klang, where they have the technology to recycle the used PV to make it into other products. And it has been authorized by DOE. So hopefully by end of this year, we could have the guidelines ready that help the developers and industry to do the proper way on recycling of the PV panel. Yep.
If it's okay, I'm happy to supplement it. So because I mentioned that I look at the entire value chain, especially on the battery side, it's actually very interesting that from a battery material recycler standpoint, some of the recycle players are able to recycle up to over 95% of the battery material. Yeah, in fact, if you look at countries' policy, as alluded by Arza just now, I think countries are starting to also realizing the need for that. But I just take example for China. I think China realizing the potential to recycle. They're one of the, of course, lead player in the EV play and BESS as well. They already actually put a ban on some of the exporting of this recycled material, despite some of the very strong recycle sort of self-shop in different countries. So, and even players like CATL, and these are public information that you can look at, they actually have a dedicated subsidiary that will actually look at how they recycle the battery material and how they sort of complete the value chain and make sure that there's a circular economy to that. Now, the other part I also want to mention, I was also a panelist at the Global Battery Alliance last year in Shanghai, and one of the drivers, the Global Battery Alliance, is actually sort of as a strong proponent, which is already happening in Europe, is to mandate that new batteries would have to have up to a certain component of recycled battery material in order to make sure that the circular economy is maximized. Now, with that say, within UOB, we have a specific ESG solution that we actually work with our sort of clients and players to help sort of finance and look at how we can optimize the capital inflow so that when we say we use battery, it can be truly green.
Maybe I can add a little bit. Like for myself, we have been helping the Johor state government to come up with a policy on renewable energy. And actually one of the main things we are talking about is the recycling of the panel. So just now, like Puan Nazar mentioned, the frame is everything, right? But the problem now is we don't have a proper guideline, like during installation or during dismantle, how is it easy to separate them back? So at least that will help in terms of the recycling procedure, right? So we are also looking into this at this moment. Yeah, so there is something that hopefully in the future, there will be a proper guideline on how to do all that. Yeah.
Okay, so thank you very much. So Puvana actually is doing waste management. She's also one of my friends and clients. So you see, with joining the ecosystem become bigger and bigger until the battery to the used battery houses work. So I think this is a beautiful how the collaborative learning platforms will really work, and in a small scale, a targeted way. So I think this is something that we are just more action here. We are just a very small player in the ecosystem as a training providers, but we hope this can be really accelerated integrated and maybe as a lesson learned from other ASEAN countries, yeah, to work on with a collaborative way of learning. And we also welcome more partners to join us as ecosystem learning partners together. Yeah. So thank you very much for all the audience here and also all our speakers here for the insightful sharings. So thank you very much. And now I would like to invite my directors to give a token of appreciation to all the speakers. Right.